Despite concerns of sequestration, European problems, and a slowdown in consumer spending and industrial production over in China, non-farm payrolls lifted the market and got people to invest another $2.6 billion into the conventional fund business. Hi, my name is Tom Rosine. I'm going to be presenting Flows for the week ended March 13th, 2013. Thanks for joining me today. You know, as we were saying, that the production, the production of, the Chinese production issues really kind of put a damper on things. But when we saw that the unemployment rate actually decreased to 7.7%, we put some new charms on the market. In fact, the market actually reached a high in the S&P 500 and the Dow, and the Dow actually reached new record highs for 7 consecutive days, and the market was actually at new highs 9 days in a row, so we didn't have a breather in between hand, and from that we actually saw money coming into the market. Let's see how that played out as far as fund flows into our domestic and international and fixed income markets go. If we take a look at the equity group as a whole, we saw about $3 billion in net new money coming into their coffers. Taxable bond funds saw about $1.8 billion of money going to their coffers, and then we saw people get a little bit more risk averse, or I said risk seeking, I should say. Muni bond funds saw about $0.3 billion flow out of their coffers, and then we saw money market funds shed about $2.4 billion. So that was basically the story that we were taking a look at. People were willing to put risk back on their portfolios, and they were taking money out of the kind of the normal spots, where either treasuries or that type of thing. We'll discuss that more as we move on. But let's take a look at equity funds and how that played out, because that was really quite the story. Equity funds were up 0.8%, so about 80 basis points for this week just recently ended on Wednesday. It was the second consecutive week that we've actually seen the positive performance, and we saw $3 billion go into the equity funds business. And again, this is ex-ETFs. For the 10th consecutive week, this was actually inflows coming into this group. So that was quite an ordeal. Year to date, we saw about $69.1 billion come into that group. And of that, we saw a lot of money, again, coming onto the equity and also the ETF side. We'll talk a little bit more on this. This was $69.1 billion year to date into just conventional funds. On the domestic side, we saw about $1.4 billion enter their group. This fourth consecutive week, we've seen positive flows. And then we get back to the non-domestic equity funds. About $1.6 billion went into the non-domestic equity side. And of that, when we're taking a look at it, we've always been talking about emerging markets. Actually, they were just not that popular. People are going to more domestic groupings, or I should say more of the international groupings rather than emerging markets. So about $208 million enter that group. And it's the second week in 10 that we saw inflows below $1 billion. That was quite a feat. And if we take a look on the domestic side, we saw about $1.6 billion go into small cap funds. So we saw a change in rotation. We've been talking a lot about large cap funds, or at least I have been over the last several weeks. Now we saw investors actually go a little bit more risk seeking and down into the small cap group and putting money to work back there. Let's take a look at what happened in the equity funds as far as ETFs go. ETFs was quite a story. $8.3 billion net new money going in there, and really where we saw it, it was one of the largest flows that we saw, for weekly flows since January 9th. 2013, so not that long ago, but again, one of the big flows that we've seen. And where the big story was, SPY took in about $3.2 billion in net new money. And then on the news that Q4 GDP in Japan was better than expected, up to about 0.2%, we saw iShare MSCI Japan Fund taking about $539 million. And Wisdom Tree, for the second week in a row, by the way, on this list, Wisdom Tree Japan hedged equity funds saw about $426 million of net new money come into their coffers. And when we saw at the bottom, well, lo and behold, gold's been having a very tough time, and we saw gold at the bottom only shedding about $415 million as a whole. So when we're taking a look at these groups, basically we see again kind of the pariahs going down to the bottom, and we see kind of a new trend with Japanese funds, small cap funds, and the like actually at the top. But the SPY was the big story because people were betting that in fact it would hit an all-new time high, and people thought the momentum would carry people through, so we saw people putting bets on the SPY as well. So now let's take a look at fixed income funds. Certainly that was a story as well. We've been hearing this idea that fixed income funds, we're seeing net outflows and to pad the coffers of equity funds. It ain't happening. We hadn't seen a rotation. In fact, conservative investors towards the end of the month, a little bit concerned with what's going on, for the 19th consecutive week, put $1.8 billion in this week into fixed income funds. This is the third consecutive week that we've actually seen upside performance, 0.8% return. And at the top of the group, we saw the corporate investment grade debt funds taking about $1.8 billion, the 39th consecutive week. And of that $1.8 billion, loan participation funds accounted for $1.1 billion. Again, it was their third best inflow for that time period, and it's something that we've been seeing and keeping account of for quite some time. Let's take a look now at ETFs and how that happened. And as we know, ETFs have not been quite the story. There's not been a lot of money flowing into ETFs. In fact, this is one of the areas we saw an outflow. We saw, one of the outflows was about $600 million. One of the outflows actually came from iShares of TIPS, about $460 million flew out of that. And when we saw the inflows, it was towards people looking for kind of adjustable rate type of securities. And we saw the Power Shares Senior Loan Participation Fund actually taking about $100 million. So that's been kind of the story for fixed income for quite some time. We haven't been seeing a lot of flows into it. It's kind of been off and on. It's a small group for the ETF universe and all the money under management. Let's take a look now at muni bond funds, because we saw for the second consecutive week that they actually had a negative performance, down about 0.43%, and a second consecutive week of outflows. About $320 million came out of their coffers. And of course, national muni make up a big chunk of that. $118 million of that came out of the national muni arena. And that has been a story that we've been talking about for quite some time. Munis have a hard time disengaging themselves from treasuries. People kind of see them as a safe haven bet. Of course, you can go into the high yield munis, but when people are talking about munis, they're thinking kind of safety, government backed, that kind of thing. And of course, every time we have kind of the risk off play, we see munis get punished at the same time. So it's only been 2 consecutive weeks. Well, where we've seen some money actually, flow out the doors, that has been money market funds. Money market funds this week saw about $2.4 billion in outflow. It's the 5th week in 6 that we've seen outflows. Taxable money market funds saw about $2.1 billion on the inside. And how that was breaking out is that institutionals took in $4.9 billion, while retail investors actually took out about $2.8 billion, leaving us with a net of 2.1. And if we go to tax-exempt money market funds, we saw a $4.5 billion outflow. Again, that story. People putting risk off their portfolios, risk on their portfolios, getting away from some of the riskless assets and putting that back to work. Well, now comes the time, we're running this on Monday, a day late than we usually do, and the reason is we just got done with the Lipper Fund Awards, and what we heard about this morning was Cyprus. They're going to try to rework, if you will, their divisive bank tax, and I think that's going to be the story on everybody's lips for the next couple days. Our next flows will be coming out this Thursday. We'll talk to you again this Friday. But thank you for joining me. My name's Tom Rosine, wishing you the best in your wealth planning and creation.